House prices predicted to fall 10%. Let's have a look. Hello everyone, I'm Florian.Heise and welcome to another episode of HeiseSays. Grab your morning stein of coffee and let's have a look at this article from news.com.au discussing, well, Commonwealth Bank executives, or their boss, expecting a 10% fall in property. Now, recently, back in May, the CBA predicted up to a 30% fall in property, worst case scenario. And you can see here the video that I looked at it. And there were some senior executives in the banking sector and finance sector selling their luxurious properties in Sydney. Wonder why, get that profit while you can. Now, if we have a look, let's look at a few things. It's generally accepted that property prices have skyrocketed, particularly since 2000, everyone. And I'd argue that a big portion of that has to do with an overheating of the foreign investor sector, particularly between 14 and 17. You can see that here. Look at the number of approvals, building approvals for foreign investors. It really overheated it. But another thing to have a look at, and this is just out here. Let's look at, you can see here on the video on the screen, you've got, the change in dwelling values. We'll bring up here the current change in values. Now, the Sydney is now at 866,000. It was 889. And this is just from April to July. So it's taken a hit. Melbourne is at 678,000. Brisbane at 502,000. We're down about $5,000 according to the last chart I'm looking over here. Adelaide is at 441. Perth is at 439. Hobart is at 486,000. Hobart is higher than Adelaide and Perth. Now, don't get me wrong. Hobart's a beautiful city. I remember when I travelled down to Tasmania, particularly to Lonnie, seeing how cheap the houses were there compared to Brisbane, because I worked for a firm that had their headquarters in Launceston, and I was quite jealous, to be honest, of the Tasmanians who could be doing the same work I was doing and afford a house where it was a distant dream here in Queensland. Darwin, 384 grand. So that's looking a reasonable house price, I'd say. Something sensible at least, something you could manage on a normal wage quite easily. Maybe I'm just very cheap, guys. Maybe that's what's coming through here. So many years of living cheap. Canberra at 640 grand. The combined capital is 637. Combined regionals at 395 and the national at 550,000. So we can see here Sydney is really rocketing high above. But look at their month change, negative 0.9. Melbourne, negative 1.2. Brisbane, negative 0.4. Adelaide's up. Perth, negative 0.6. Hobart, negative 0.2. Darwin, negative 0.3. Combined capitals, negative 0.8. So they're all trending down. We have a look here. We can see the month on month. This is the third month of a decline. So we need to have, a few quarters. 2 quarters, don't we? So we've done one. We need another to be in a property recession again. You can see we were there as well. So it didn't feel like it. It didn't feel like it. Here's the delta. You can see the changes graphically represented. Look at regional Tasmania. In the past 12 months, it's still up 10.3%. We've got some viewers there who are from Tasmania, buying property out of Hobart, looking to get some acreage, and just complaining how expensive it is. So let's have a look at this article where they're discussing now a 10% drop. What do you think? What do you think? It's not just spruikers all the time. It's not just one thing after another generating FOMO. Although we're hearing of lots of young people, I'm seeing it in my Facebook feed, people jumping into a house. People thinking that this is the only opportunity, using their super that they've all gotten out, using the grants from the state government, using the grants from the federal government, avoiding the stamp duty to jump into the housing sector right now. When we have JobKeeper propping up so many businesses, when we have mortgage holidays in place until March, when you have trading while insolvent liabilities removed from directors in businesses, so you don't know how many of them are on the edge about to fall over, and while you've got a boosted job seeker payment. So all of these interventions are in the market. We also have lower international tourism. We've got lower migration. You've got lower international student numbers. So why would you buy now and not just wait 6 months? because rents are going down. That's not a problem. You can negotiate a good deal. So is this because people are being manipulated? People are getting FOMO, thinking this is their only chance to get in. Thinking property just shoots up. I need to get in. Is that what it is? Let me know your opinion in the comments. Who have you talked to? Let's try and get a bit of an experience there of what's been going on. Maybe I should, let me know if I should do a call-in show and get people to come in. I should try and figure out how to do that. Let me know if you'd be interested in that. I know Mike Martins does it all the time. He gets people calling in all over the world. Would that be something you'd be interested here? Let me know. Because I read the comments and there's some really interesting stories, particularly those of people sharing their experiences working over in WA in the mines and the insane property price increases, the insane rent increases over there that we've seen. So let's have a look at this. The coronavirus pandemic has not hit the property market as hard as first thought, according to the head of the Commonwealth Bank. CBA Chief Executive Matt Comyn had tipped 3 months ago house prices could drop by 30% in a worst-case scenario. Now, the question is, was that a strategic tipping to kind of scare the government into home builder, into juicing up the market? I mean, if anything, I need to have a hat on. Put the conspiracy theorist hat on there. What do you think? What do you think? But the boss of Australia's biggest bank, even if it wasn't intended, even if that wasn't actually intended to be the outcome of that worst case scenario, do you think that's what pushed him over the edge? But the boss of Australia's biggest bank has now revised the figure to at least 10%, saying the property market had more resilience than expected. He said prices had drifted only slightly lower and described the bank's original predictions as just the scenario that we needed to prepare for. I think a reduction in the order of 10 to 12% is still a reasonable assumption, Mr. Comyn told journalists on Wednesday, as the bank delivered a full-year cash profit of $7.3 billion. We do have an expectation that in some areas, particularly in inner-city areas, there has been downward pressure on rental yields, so we think that's going to weigh on house prices. We would say overall, and looking at the numbers in the last few months, the housing market has been more robust than perhaps we would have anticipated from March. Probably because everyone's getting a mortgage holiday. Could that be why? Maybe. Probably because we've got JobKeeper propping up businesses that might have gone under. Let me know what you think. Because housing moves slow. Housing isn't like the stock market. Housing takes time to sell. So I don't know how you can actually develop a daily index of house prices. It just seems ludicrous, but people can do it. People find a way because we're so property obsessed here in Australia. We're ravenous for property. We're fans for property. It's all about property here in Oz. In May, Westpac forecast a 20% fall. All four of the nation's big banks were predicting double-digit falls with rising unemployment amid the pandemic. CBA has also published modelling that shows unemployment rising to 9% by the end of the year before falling to 7.5% by the end of 2021. And if we bring that up here, we can see right now we're sitting about 7.4% unemployment according to the ABS data. So they're predicting a 9% unemployment rate and then falling back down to worse than now. Just think about that. He said more government support will be needed to stimulate the economy. And this is the problem, everyone. This is the problem. More government support means more taxation, one way or another. There's going to need to be some policies and investments at both the federal and state level to support greater jobs creation so we can bring the unemployment rate down, he said. Earlier, the bank revealed the extent of the damage caused by the pandemic, with its cash profits sinking by 11.3%. The pandemic hardship measures have caused a blow in deferred loan repayments of more than $1 billion, impacting its cash position for the year ending June 30. Overall, we're lucky that we came into this period in a very strong position, so the banks have been able to operate very effectively during this time. But of course, we have been impacted, he said. The bank warned dampening credit growth and low interest rates would place pressure on its revenue income for the current financial year. So there we have it. CBA is revising their forecast or their predictions of a property hit down to 10%. What do you think? Do you think you'll take a 10% hit? How's your property doing at the moment? Because when I look, because I'm with the Combank, when I look at my, sign in to do my banking and it says your property's worth this much, or, you can use your redrawer if you need money every bloody time they're trying to get me to take money out of my my mortgage, my overpayments, to spend. I mean, that's what they do. They want to trap you in. But then, I look at what they value my house at, and then I look at the place across the street that didn't sell, or the place up the road that sold for 90 grand less than what he bought it for a couple of years ago. And I think, I'll pretend and imagine that their prediction valuation is correct, while I know it's definitely not, probably a third less than what they're predicting. It'll make me feel good. Like when I'm these property geniuses that have made a huge amount of money doing nothing. But the question is, or the thing we need to be aware of, is that it's the most recent sale in your suburb. It's the most recent sale in your street that actually affects the valuation of your property. So when they're talking about a 10% drop, sure, it may be just to certain locations, but actually I'll bring up a good old favorite chart I love showing, the unit price growth here, the difference between the Red Rooster Line and the Goat Cheese suburbs, the posh suburbs and the more working class suburbs. Growth hasn't been uniform. So we'll have to see where that materializes. Because if you're one of the working class suburbs, you're not going to get the same returns. You may get much worse than a 10% hit. We'll have to see, everyone. And I expect to keep my eye on this housing property market. It'll be interesting what happens next year when the holidays on mortgages disappear. When people start getting the tap on the shoulder on January after Christmas going, you need to sell. Will we start seeing forced sales and we'll land? Then we'll start to see the actual manifestations of this recession. As always, let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I will see you all in the next episode.